some states have extended protections, many have not. Diana Olick joins us now with a closer look at where in the country we could see the biggest spikes. Diana?
Yeah, Kelly, by the end of September, up to 23 million, or that's 1 in 5 American renters, could be evicted from their homes. And that's according to analysis from the Aspen Institute. Arizona, California, Nevada, among those with the highest share of renters at risk. But when you look at the actual number of renters, it's close to 4 million Californians, 1.5 million Floridians, more than 2 million Texans, and 1.5 million New Yorkers. Aspen factored in renter household incomes, savings, and rental costs by state, as well as real-time surveys on renter confidence from the U.S. Census. And those numbers were released yesterday, showing that in the last week of June, 76% of renters had made their full payments, but just 38% were highly confident that they could make their July payments. 12% had no confidence at all. Now, renters in single-family homes appear to be doing better making their payments, but single-family rental REITs like American Homes for Rent and Invitation Homes are at risk. And renters in multifamily apartments are having a harder time. REIT names like Camden in Texas and Avalon Bay, which is heavy in New York, they could also take a hit. Kelly?
All right, Diana, thank you. Diana Olick, we appreciate it. Joining me now to talk more about the real estate market with the recent spike in COVID cases, which is raising concerns about the housing recovery. Where are we right now and which markets are doing best? Ryan Schneider is the president and CEO of Realogy Holdings, the parent company of Century 21, Coldwell Banker, and Sotheby's, among others. Ryan, it's good to have you here. Diana was just outlining some of the problems in the rental market. Do you expect that to ripple through into the housing market overall?
Well, Kelly, thank you for having me. We're seeing something pretty different on the purchase and sales side at the moment. You know, the COVID impact was huge in terms of the negative hit in late March and early and April. But May has been an improving market for sure in terms of new transactions. June was even stronger than May and up year over year. And even the first few days of July have continued to go up. So we're watching it closely because we've seen the negativity of what COVID can do, both overall and in specific geographies, like what happened in New York City. But the momentum in the purchase and sales side of the housing market has been quite strong now for a few months. And you know, we're obviously hopeful that continues, but we're watching the COVID situation closely.
Yeah. So overall, would you say that the pandemic is a catalyst for housing turnover, for home sales? Like you said, in this area, we saw a lot of home sales in the suburbs when it was in Manhattan really badly. What's happening now? Is it spreading throughout the South and West?
Yeah, we're starting to see that, you know, in two different ways. So first off, there are some geographies where you're literally in the data seeing the rotation from urban to suburban living. New York City is the strongest example of that. We're seeing some of that in California. There's a few other examples. But in every urban geography, the web traffic of people and what they're searching for has changed versus 6 to 12 months ago to be much more suburban. So even in the urban geographies where that rotation has not happened in the actual housing purchase and sales yet, the consumer searching is going in that direction. And we continue to see that through the whole COVID crisis of the last 3 months.
And I'm seeing here some of the features home buyers are looking for. 65% want access to a yard and outdoor space. 59% want a laundry room. 46% want a patio or deck. Absolutely, this sounds like those people who are frustrated by having to shelter in place, stay at home, and trying to figure out somewhere would be a little more amenable. And then tell me about the impact that rates is having. You know, how much of this is pandemic driven? How much of this is affordability?
Well, I think there's a big piece of it that's pandemic driven, especially some of the pent up demand after that big drop in late March and April in terms of people signing new housing contracts. But the low rate thing is a huge benefit. You know, the mortgage application, increases have looked great. And remember, we were starting off the year with a very strong housing market, right? Q1 housing growth, even with COVID hitting the last couple of weeks of March, was quite strong. We had a lot of good growth in our company. And so, you know, the low rates and is behind that also. And so, you know, there is a resumption of some of the momentum that the housing market was showing in Q1. We like the low rates, obviously, for housing, but we're watching the COVID part closely.